We have printed more money in the last year and a half or so than all of the printing before this, and even, since 2008 and 9. I mean, just years and years of this. So they keep doing exponentially more. So they're just desperately keeping this bubble going. And when you get in this phase, there's no way to say, oh, it's going to happen this day or this month. I mean, I was able to predict the 2007 top because I could precisely determine within several months when the baby boomer was going to peak and momentum was going to turn down. But this is just, a bubble's going to go until it bursts. I'm now looking literally at chart patterns and things like that to see when this bubble looks like it's going to pop. And this looks like one of the times right here in December where it could top. If not that, it'll be early next year. After that, I'm going to be shocked if we do not see a downturn. So it's at the point where, to me, this is such an extreme bubble. If you're hanging in there to say, well, maybe it goes another 3 or 4 or 5 months, I'm like, get out. What my research does show 100% is that when a bubble like this bursts, you're going to see 40 to 50% crash in the first 2.5 months. And if you sit and wait for that, it'll happen before you're ready, and then you'll panic when that happens, and then it'll bounce, and then you'll look like a double idiot. This is the hardest damn thing a person can possibly do, is fight a bubble, which every central bank is so committed to keep going that they will print $5 trillion. Yeah, $5 trillion has been printed just since COVID by the Federal Reserve. That's what I'm fighting. But I'm telling you, if you think you can keep printing exponentially more money and keep a bubble going forever, then you have not studied history, and you're the insane one. So I'm standing by my forecast. Yes, I'd rather be early than late. What did I just say? First crash could be as high as 55% in 2 to 3 months. That's what we're looking at. You want another 5%, 10%? Maybe I'm early, fine. If you risk that and you're wrong, you could be down 50% before you know it. The big thing right now, which is extremely unusual, we have 6.8% inflation and rising, and the 10-year Treasury bond is yielding 1.4%. That's like a negative yield of 6-7%. So I think the Treasury bond if it keeps edging up, that could be the trigger. But we're just way beyond this thing. Monetary policy lags about now it starts, but it lags about 18 months in its real effect. And so they've been forced to start to taper off. What I keep telling people, you got to understand addictions, you got to understand bubbles. They're both the same thing. Something blows up, it takes exponentially more to keep a bubble or an addiction going. And all it takes is just pulling back. You don't have to stop the stimulus, just less stimulus. And then no stimulus is all it takes at some point. So it's just a matter. And so now they're forced to get a little more tight. Well, if they're going to decide, if they pull back and immediately get easing quickly, it's going to look like they're panicking. So now that they're in a tightening mode slowly, it's going to take them a little while to respond and go the other way. And in that time, again, remember what I said at the beginning, 2 to 3 months, every major bubble burst has happened within 3 years, and it's been from 42% to 50%. And my calculations on this one that's been so stretched is it's going to be 54% the first crash. If that first crash happens, if they just slip that long, people will lose confidence in this market. Imagine if the S&P dropped, 54% in 2 months. You think anybody believe, oh, well, they'll just print money again, it'll come back. You will not see the market come back if it crashes that much. I will almost guarantee you that. What are they doing right now? They're stepping back. They're stepping back cautiously. Now, once you start stepping back, if you turn around and instantly goose it again, you're going to look like you're idiots and you're crazy. So they're already compromising themselves. Why? Because they keep pushing the bubble bigger, and the economy, you can only squeeze so much juice out of a lemon. The economy is not responding. I mean, it's $5 trillion in 2 years. We should be growing at 20% a year. So you get less and less as this escalates until basically the central banks lose the war. There is no way they win this war, because next time, if they printed $5 trillion since COVID, next time when we crash, they're going to have to print $10 trillion. Where does it get so ridiculous that nobody has any faith in anymore? And that's what makes it hard to predict. I'm saying I think we're there. What's happened uniquely here, the markets did peak in late 2007, as I've been warning for a long time, when baby boomers were peaking in their spending curve all the way from 1983 to 2007. That is when people keep hitting age 46, their peak spending in higher numbers. And what happened in that crash in 2008 and 9 is the central banks panicked and they just said, well, we can't have a depression. And that's what it looked like. And that's what it would be like after such a great boom, just like the roaring 20s and in the early 30s and the Great Depression. And so they've been printing money ever since. And then when they hit COVID, they printed more money in the last year and a half or two than they printed in the 10 years before that. So we're in this basically confrontation between central banks desperately printing ever more money to keep us from shaking out the greatest bubble in financial assets in history, the greatest debt bubble in history, and now global more than any time in history. I am telling you, and I will stand by this, we are going to see, and I think it's going to happen in 2022. You cannot tell exactly, but the signs are recently, what we've seen one index from the corporate bonds to then the small caps and Bitcoin, and then the NASDAQ peaked in November 22nd, and it looks to me like the S&P could have peaked basically yesterday. So we see the succession of peaks down into narrower, more large cap. That's a classic long-term top. That's why I'm saying it's likely now, but there is no way to tell this until it happens. But I am warning people with unbelievable analysis in history of every bubble, major bubble in the last 150 years, that first crash will be 40 to 55% so fast you will not see it. So if you wait to see if I'm right and take that risk, you're going to be hit very, very hard. And history is very clear about that. No exceptions to that.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.